This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the latest episode of the Bitcoin Bulletin Podcast. I am going to try and keep this a tight rip. We are closing in on midnight, and I want to make my DCA Wednesday stack. I am not in my studio. I am at an undisclosed location in frosty, cool Central Florida. It's actually 59 degrees outside right now, which is not horrible for where many of you are, but pretty darn chilly for the beach. Nonetheless, it is Wednesday, November 29th, 2023, and that means it is DCA Wednesday. Did everyone have a great Thanksgiving? Did you successfully orange pill any of your friends or family members? Or more importantly, did you get through Thanksgiving without having a fight over Bitcoin with any of your friends or family members, or over politics, or over anything for that matter? I know for those of you who are in countries where you don't celebrate Thanksgiving or didn't celebrate it on Thursday, that doesn't necessarily apply to you, but for those of you listening in the United States, last Thursday, of course, was Thanksgiving. For those of you listening in Canada, I guess your Thanksgiving was in October. And I don't know what other parts of the world have a similar celebration of Thanksgiving. I know many countries have something similar. But I digress. As I was mentioning several episodes ago, before you know it, Thanksgiving will have come and gone. And then we'll be talking about Christmas. And before you know it, Christmas will have come and gone. And we will be looking at that next Bitcoin halving, which is the next major milestone as far as the Bitcoin blockchain is concerned. Before we get into the news and all of that, though, let's take a real quick look at the vital statistics. At the time of this recording, Bitcoin is sitting at a block height of 819,070, TikTok next block. And the price of Bitcoin had been on a rather wild ride the last couple days. It looked like it was going to make a run maybe for $40,000, but then pulled back quite a bit, or pulled back a little bit. We're still up about $600 from where we were last DCA Wednesday. Currently, Bitcoin is valued at a US dollar price of $37,925. So continuing up and to the right, if you take that zoom out picture, or 2,637 sats per filthy US dollar. So about 40 sats, 39 sats fewer per dollar than last week's purchase. And speaking of the halving, that puts us 20,930 blocks away from the halving. Currently, it's looking like that's going to occur now as early as possibly April 19th. It had been pretty consistently estimating that the halving was going to occur on April 20th. Although, if you zoom out on that, that's been steadily marching closer too, because there was a block of about a month where it said it was forecasting the halving would take place on April 22nd, and then that slid forward, and there were 4 weeks in a row where it said that might happen on April 21st, and then a month where it was saying it would happen on April 20th, and now it's saying April 29th. And the reason for that is because the next minor halving reward will occur at block 840,000. Many people say that Bitcoin halves the minor reward every 4 years, and that's kind of true, but it's not based on years. The minor reward is halved every 210,000 blocks, and so that depends, how soon that happens depends on how fast or how slow blocks come in. If they were to average 10 minutes, as the blockchain is intended to average one new block every 10 minutes, then, it would be every 4 years. But as hash rate has increased, blocks have tended to come in faster. That's resulted in difficulty adjustments that try and slow it down, but hash rate continues to increase. So over the life of Bitcoin, more often than not, blocks have been coming in slightly faster than 10 minutes on average, and as a result, the next halving is looking like it's going to be on April 19th, and if hash rate keeps growing, maybe even sooner. Either way you slice it, it's coming at you like a big dog with a wet nose, and it will be here before you know it, and that traditionally kicks off the next bull run. 6 to 18 months after the previous halvings, we've seen Bitcoin set a new all-time high, and then go just on a face-melting epic euphoric phase to where it sets a parabolic new all-time high. And then, of course, we've had those huge pullbacks and the 2 years of Bitcoin winter until the next halving. I'm getting a little bit ahead of myself. Bitcoin's current price gives it a market capitalization of $741.7 billion, $11 billion more than last week. So that number is going to climb. As you know, I think when Bitcoin retakes its $1 trillion market cap, that's when the financial media, that's when Wall Street's going to start getting really interested in Bitcoin again. Usually when Bitcoin sets a new all-time high, that's when people really start, normies really start paying attention, saying, oh, Bitcoin didn't die. Wow, that's amazing. Bitcoin set this new all-time high. I thought it had gone away. And that's kind of the end stages of the bull market. It's already eclipsed its previous all-time high. And then really we only have a matter of days or weeks, when it's going completely parabolic before we have a retracement. Last cycle was a little weirder because we had that double top. We set a new all-time high at like $66,000. And then we had a big long valley. And then we did that in the spring. And then in the fall, we hit $69,000. And there was some shenanigans going on there. We had the China minor ban FUD. And we had Elon Musk kind of precipitate the first all-time high when he announced that, Tesla would be accepting Bitcoin. And then there was the Elon FUD when he rescinded that because he was getting that ESG pressure from the, Bitcoin's going to boil the oceans nonsense. Each time is a little different, and last cycle was certainly no exception. But traditionally, all that happens, 6 to 18 months after the halving, and that's coming up fast. For those of you who still value your wealth in shiny yellow rocks, it will currently cost you 18.7 ounces of gold to purchase just one Bitcoin. That is a tiny bit cheaper than last week's 18.9 ounces, but that is mostly because as the US dollar is losing value, the price of gold has become more valuable compared to US dollars as well. I think it was above $2,000 an ounce again last time I checked. So it will always trend to zero in terms of Bitcoin, and we have seen that consistently. But on the minutia, when you zoom in instead of zooming out, there's some give and take in the price of commodities when compared to Bitcoin. However, obviously, if you zoom out in the grand scheme of things, everything trends to zero in terms of Bitcoin. Pardon me. For those of you who value your wealth in pizza, one Bitcoin will score you 2,121 large pepperoni pizzas from Papa John's. That's about 41 more pizzas than one Bitcoin would have purchased you last week. And we're closing in on almost 6 years worth of pizza. If you ordered one large pepperoni pizza a day for almost 6 years, it still wouldn't eat up a whole Bitcoin. And that's pretty impressive. So pizzas are definitely trending to zero in terms of Bitcoin, with being able to purchase 30 something more pizzas this week with just one Bitcoin than you would last week. All right, that metric I like to follow, Bitcoin's 24-hour on-chain average transaction rate, has declined substantially since last week. Hopefully that's because we're seeing that bubble in the BRC S-coin tokens and the ordinals and inscriptions fading away. We saw a huge push in ordinals and inscriptions a few months ago, and that ran Bitcoin transactions through the roof. It used to be that you pretty much would never see more than 4 transactions per second average on chain, and they ballooned all the way up to almost 8 transactions per second. I think the highest we saw on DCA Wednesday was 4.76 transactions per second. 7.76 transactions per second. But I saw it higher on days when I wasn't recording podcasts. We're a lot closer to normal because we're currently averaging 4.26 transactions per second. And in the past, that would have been really, really healthy on-chain activity. Right now, it's significantly below where we were last week. And that kind of corresponded to that little bit of a price pullback we saw. So interesting metric. I'm not sure it necessarily means anything at this point in time. Maybe we will officially get rid of the ordinals and inscriptions plague and the BRC20 token shenanigans, and it'll go back to being more of a meaningful metric. But only time will tell. And speaking of on-chain activity, the blockchain is looking almost exactly the same as it did last week. Clark Moody's mempool is showing that there are 58 blocks for the transactions pending in his mempool. That's exactly the same as last Wednesday. What has changed is last Wednesday, Clark Moody's fee estimator was saying that if you had an on-chain transaction that was of high priority that you needed to guarantee was mined in the next block, that it was going to take an 87 sat per VByte fee to do so. And now his fee estimator is saying that's down to 65 sats per VByte. One big shakeup is last week he said if you could wait a day, it would only take 10 sats per VByte to guarantee your transaction would be mined within a day. That has bumped up to a whopping 40 sats per VByte. But his fee estimator is still saying that a fee of 6 sats per VByte will be mined within a week. I would take all of that with a grain of salt. Mempool.space, at least as far as I've noticed, has tended to have a slightly more accurate fee estimator. And they're currently recommending a high priority transaction should have a 44 sat per VByte fee. That's only about $2.33. That's about half of what it would have cost last DCA Wednesday when Mempool.space was recommending 86 sats per VByte, which was about $4.50 at the time. They, however, are estimating that a low priority fee would be about 35 sats per VByte. And if you had a no priority transaction, which kind of corresponds to Clark Moody's, if you can wait a week, that you should still include a fee of 22 sats per VByte. So that's substantially more than Clark Moody's 6 sats per VByte recommendation. Obviously, if you're going to play with fees, you need to know what you're doing. If you're not just going to let your wallet estimate the fee for you. Fortunately, most wallets support replace by fee or child pays for parent transactions now. So if you do end up sending a lower fee transaction that gets stuck in a mempool somewhere or even kicked out of a mempool, you can resend it at a higher fee if you need to. Otherwise, you're going to be stuck probably paying the higher end of 65 sats per VByte to guarantee your transaction gets mined, which still isn't horrible considering you can send any amount of money anywhere in the world basically instantly and that no one can stop you or censor that transaction. So the value you're getting for those 65 sats per VByte is immense, even though that seems very expensive to us Bitcoiners. I'm trying to keep this a tight rip because we're running out of Wednesday and because I'm not in my studio and I have things to do still this evening. So carrying on, speaking of mining, and we already got into difficulty a little bit when we were talking about the halving coming up and whether the halving was going to be on April 19th or 20th. Since we recorded last, Bitcoin had a reasonably large difficulty adjustment. The difficulty it takes to find the next block went up by 5.1%. That is the largest increase I've seen in a long time. Not the largest ever. I think we saw a 10% increase in difficulty, at one point in time during the show, but definitely significantly larger than those 1 to 3% difficulty increases we had been seeing. And we have another difficulty adjustment coming up in about 10 days, 1,442 blocks from now. It's still a little too early to tell. And because of that, the estimates of whether it's going to be an increase or decrease are all over the place. One of the places I look for my estimate of difficulty says that we're looking at an increase of another 0.86%, almost a full percent. And another source says we're going to have a significant difficulty decrease, a decrease of 3.3%. And that, of course, is because, we're only, we're only 4 days or so into this mining difficulty epic. And so anything could happen. We could have a lot more hash rate, pour on, more difficulty, more powerful miners swap out and replace some of those lower powered miners. Or we could have a pullback, if the price dips or if something weird happens like we had with the China miner ban. You just never know until it actually happens. And it looks like we won't know for sure. But, pardon me, that's something stuck in my throat. At the time of this recording, blocks are crawling in at an average of 10 minutes and 24 seconds between blocks, which is obviously slower than 10 minutes per block and slower than we've seen in a while. So if that holds true, we'll be looking at a decrease in mining difficulty. And that's good news if you've got a garage miner because you'll earn a little bit more Bitcoin. You'll mine a few more Satoshis each block. But in the grand scheme of things, difficulty increasing is a good thing. Traditionally, And this is a metric I have a hard time putting any faith in because I think it's just a matter of coincidence. But traditionally, price has followed hash rate. We've seen the hash rate ramp up and then the price has gone up afterwards. That could just be because everyone knows the halving is coming and that the bull run traditionally comes after the halving. And so the miners are preparing for that, especially the large commercial miners. They're not idiots. They plot these things out months in advance. They budget months, maybe even years in advance for how they're going to bring their hash power online, et cetera. So for now, that seems to be holding true, but I think a lot of that is basically coincidental. Real quick, I want to take a break to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 apps like Fountain allow you to support your favorite podcasts through the value for value model, where you can stream sats on a per minute basis to your favorite podcasts or send, one-time boosts, which are a lightning message that, comes with, you can send a message to your favorite podcast that comes with some sats because it's on the Lightning Network. And we do have one boost to read. Again, it's from Leggy. Leggy sent the podcast 3,000 sats and simply says, "Thanks!" Thank you, Leggy. Thank you for being a longtime listener. Thank you for being a longtime supporter. It is always great to hear from you, to know you're out there listening and that you appreciate the podcast, because while I love talking about Bitcoin, feeling like you're appreciated makes it all worth it. And speaking of listeners, our geographic distribution of listeners has remained exactly the same. It's kind of ossifying, like Bitcoin's code is ossifying. That is a good thing, because since it hasn't changed, it means, things are staying the same. We aren't necessarily adding listeners, but we haven't necessarily been losing listeners either. And I've heard a lot of my favorite podcasts lament a drop-off in listenership during the bear market, during the crypto winter. And we've seen that too during the all-time high when Bitcoin was on a tear. Our listenership was going through the roof, and when Bitcoin was at an all-time high, some of those episodes just have obscenely high listenership numbers. And then when we were in the crypto winter, the listeners got more steady. They dropped off to where they had been averaging and have stayed there basically throughout the whole crypto winter. So thank you to those of you listening. The breakdown is still as follows. Most of you are listening from the United States. Over half of you are still listening from the United States. The second most populous country for our listenership remains Argentina. So muchas gracias, amigos, in Argentina. Number 3, as usual, remains Germany. So Dankeschön, mein Freund in Deutschland. Number 4 remains Luxembourg. So again, Dankeschön, mein Freund in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number 5 remains Canada. So thank you to those of you who've got to be a lot colder than I am in Canada, because if it's only 59 degrees here on the beach in Florida, it's got to be really, really chilly in Canada. Number 6 remains Spain. So muchas gracias, amigos, in Spain. Number 7 remains Colombia. Again, muchas gracias. Number 8 remains Sweden. So thank you to those of you listening in Sweden, where still nobody has reached out to me and told me how to give a proper greeting or expression of thanks in Swedish. Number 9 remains Singapore. Same thing. If you're listening from Singapore, send me a DM on Twitter at BTC Bulletin Pod and let me know how to say hello or thank you, a customary greeting or expression of thanks if for where you're listening in Singapore. Number 10 remains Venezuela. Again, muchas gracias, amigos, in Venezuela. And thank you to everyone, regardless of where you're listening, because when I break down the stats, the list of countries with listeners continues to run infinitely more than just those 10 countries. So people are listening all over the world, and that is really cool to know that regardless of where I look, there's probably wherever, if I threw a dart at the map, if I just spun the globe and touched my finger to the globe, chances are we have a listener or two in that country, and that's really, really cool. So thank you, Leggy, for supporting the podcast with your boost, and thank you to everyone, regardless of where you're listening. All right, so the biggest news of the week probably was that Wallet of Satoshi has pulled out of U.S. markets. I believe it was on Thanksgiving at like 1 o'clock in the morning, East Coast time. They just simply sent a tweet saying that they were making the difficult decision to pull out of the United States, and that Wallet of Satoshi was no longer available in the Apple Store, the App Store, the Google Store, the Apple App Store. And that is indicative of what I've always been saying about how this and then they fight you stage is going to go. and that in the United States, because code has been ruled as law by the Supreme Court, they can't flat out ban Bitcoin. And even if the Supreme Court hadn't protected code as free speech, you can't ban Bitcoin anyway. I mean, they've tried to ban lots of things throughout the history of the world or the history of the United States. And every time the government tries to prohibit anything, it's been a spectacular failure. And, if you can't stop people from bringing drugs into prisons. And, maximum security prisons have walls and guard towers and guards with guns on them. And, everyone's basically under heavy 24-hour-a-day surveillance, and drugs still get brought into prisons. And if you can't stop that, you can't stop some pleb from running code on a laptop somewhere. Obviously, I'm speaking to the choir. But the point being, how the United States is trying to crack down on Bitcoin is just by making it a pain in the tuchus, as Adam Meister likes to say. And I think the United States is absolutely fine with Bitcoin existing, but they want to make it difficult to use as Satoshi intended, as a peer-to-peer currency. They want to make it difficult to hold Bitcoin, in your custody and to transact with it yourself. For example, with their onerous, burdensome capital gains reporting requirements. And another way they're attacking that is by going after companies that try to do business in the United States and try to provide Bitcoin services in the United States. And by driving companies like Wallet of Satoshi away, and we don't know what happened with Wallet of Satoshi. They might have gotten a threatening letter, or they might have just seen, what is happening with, CZ pleading guilty to criminal charges, with what's happening in Canada, with the Canadian government going after, service providers for violating money transmission laws, et cetera. They might have just preemptively said, nope, we're not doing this, and noped out of the United States. But the point being, that's precisely how I anticipate the United States to try and fight Bitcoin, is just by making it difficult, because they're good with you having Bitcoin as long as you hold it in the accounts of their friends at the big banks. If you own a Bitcoin ETF, which obviously hasn't been approved yet, but I think that's kind of where we're heading, or if you have Bitcoin in custody at a heavily regulated exchange, it's no different than if you have, stocks in a brokerage account or money, hypothetically on loan to a bank in your savings account. They don't care, because it's not a threat to the system if it's just some other random asset in some random brokerage account. And it's not even getting into the it can be manipulated aspect. It's that it's controlled, and it's not a threat to the powers that be if it's controlled. Also in the news, on Reddit, someone posted an interesting chart saying 11 years ago, the first halving took place. So 11 years ago on November 28th, 11 years ago yesterday, we had the very first halving. And that's when the miner reward was reduced from 50 Bitcoin per block down to 25. At the time, Bitcoin was $12.35 per Bitcoin. There are some things about this chart that I find dubious. Like, for example, it said at the last halving, the third halving in 2020, that 93.75% of Bitcoin supply had already been issued. And that's obviously not true, because currently we've only issued 93.12% of Bitcoin supply. So that's unreliable. Obviously, the dates are probably correct, and the block reward halving numbers are correct. So I don't know whether the actual U.S. dollar values on halving date are correct. But what it illustrates is that we're moving forward. After today, there are approximately 20 more DCA Wednesdays before the next halving, just 20. And if history repeats or rhymes, I've already said that, the next bull run starts after the halving. But what I was getting at was, if history repeats or rhymes, we've found that on halving day, we've always been about half of what the previous all-time high was, maybe a little bit less than half. So if that were the case, we should be in about the $30,000 range on halving day. Another metric says we're always about double to triple what the cycle low was. So, if the cycle low was 15,000, we could be as high as 45,000 on halving day. So that means if history repeats or rhymes, we'd be looking at a Bitcoin price between $30,000 to $40,000 on halving day on April 20th. And I know there's people out there that think that this time is different, and that because we've got the looming ETF approval, that could certainly spike the price of Bitcoin, that maybe we'll have $100,000 Bitcoin before halving day. I know Adam Back has a bet on Twitter that we will be over $100,000 before the halving. Maybe that'll happen. Maybe this time is different. I'm just saying that if things happen like they've always happened in the past, Bitcoin, US dollar wise, is pretty much exactly where it should be at the next halving. So I guess we'll only know in hindsight, right? Nobody has a crystal ball. History doesn't always exactly repeat. It does rhyme. There have been black swan events and there have been golden or white swan events as well. In the previous halving cycle, Bitcoin had, gone up to higher than it was on halving day, but then crashed down hard when the economies were locked down after that black swan event that we had worldwide, where everybody was told, if you're not essential, you can't go to work, you can't go to school, etc. So the price of Bitcoin actually didn't set its cycle low until just 2 months before the halving. So who knows what's going to happen between now and then. But Bitcoin is looking like it's on a pretty good trajectory, and we don't necessarily make price predictions. I joked on Twitter the other day, everyone is making price predictions, what Bitcoin is going to be by the end of the day. It was the meme was 40K by end of day. Obviously, that didn't happen. People are making their year-end predictions because we've only got a month left in 2023. So everyone wants to get a prediction out there. So if they're right, they can brag about it for the rest of their lives. And so I jokingly said that, Bitcoin would reach a certain block by the end of the day. Obviously, that was a joke. And obviously, it did reach that block height. And that's a no-brainer because we know how fast blocks come in. They're supposed to come in once every 10 minutes, 6 blocks an hour kind of thing. What I'm getting at is I try not to make predictions, and we try to stay away from speculating about a price too much, because while it's fun to look at the price, while it's fun to envision your stack of Satoshis and what that might be able to purchase in terms of whatever currency you use in the country you're living in, whatever the current fiat, reference currency that you live your day-to-day life in until hyper-Bitcoinization, that's really just a distraction and diversion. All that should really matter is that the number of Satoshis in your stack continues to increase. And we're going to do that once again today because, as usual, every Wednesday is DCA Wednesday. And for those of you who still don't know, if you're listening for the first time, DCA stands for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this is going to be our 123rd stack. We've been stacking for 2.5 years now. We started stacking all the way back on Wednesday, July 28th, 2021. So we chose our equal portion. We kept it simple. I wanted to make it something that anybody who's listening could afford. This, of course, is a you do you thing, but anybody who's listening to my voice right now most likely can come up with $20 a week. So we set our equal portion at $20, our regular interval as weekly, and we've been consistent. And that's the important part about DCA, is that consistency. And so far, we've stacked 122 times. We've converted 2,440 filthy US dollars into a stack of 8.4 million Satoshis, 8,401,813 sats to be exact. That includes $54.90 in fees. And more recently, I continue to kvetch about this. Cash App started charging a spread in addition to their 2.25% fee. So that includes $54.90 in fees and a little bit of a spread. Nonetheless, our average purchase price throughout that entire 2.5 years, we bought at the all-time high and we bought all the way down to the cycle low. But our average purchase price has been $29,041.35, which is looking pretty good with the current Bitcoin value, with the current Bitcoin price valued at about 38,000 US dollars. So about $9,000 more than what our average purchase price is. And that's probably going to go up. Well, it's definitely going to go up again a little bit today. But so is our total stack. I was listening to the Cafe Bitcoin podcast the other day, and if you listen to that podcast, I was listening to the Twitter Spaces, but it's a Twitter Spaces. They record it and then they post it as a podcast later in the afternoon. But as you know, that podcast is not just sponsored by Swan. It is a Swan podcast. It's Swan people. It's a Swan podcast. They don't pimp Swan a whole lot. They talk about Bitcoin. They talk about the news, but it's a Swan podcast. It's that's not just their sponsor. It is Swan's podcast. And one of their regulars was just kind of savaging Swan. He was actually pimping PayPal, saying that if you're buying Bitcoin on any other service other than PayPal, you're losing money. And I get the point he was making, but it stuck out to me in two ways. First, it stuck out to me as really insulting that he's on a Swan podcast, and they let him make his point politely multiple times. And then it got to where he was almost poking at him. And I would personally never use PayPal because PayPal is kind of the evil empire as far as I'm concerned. I've been using Cash App because despite the fact they had higher fees, they let us transfer our Bitcoin to our hardware wallet for free as long as we're willing to wait a little bit. And I've never had to wait more than like an hour. It says, you could end up waiting up to 24 hours, but I don't mind waiting 24 hours for a free transaction. It's only going to my cold storage, so it's not like I need it to confirm right away because I'm going to, use it for something else to make a purchase or whatever. So as long as they let me transfer to cold storage for free, I think I'm still breaking even, especially as expensive as mining fees are right now. I'm a little upset about the spread because it makes it a little less even. But the other thing about Cash App is, Jack Dorsey's been really good for the Bitcoin space. He's done a lot to the open source software space. So I'm happy supporting Cash App. They are not a sponsor of this show. I've just been using them for the entire 2.5 years that we've been doing this podcast. I use them for other things other than just purchasing Bitcoin. I just happen to like Cash App. So we're going to use Cash App again today, even though I'm still miffed about that spread that they started charging. And the other reason I like Cash App is because today I don't have any money on Cash App. So I've got to open up my Cash App and I've got to add money. And they're going to let me do that instantly. And this is a big deal because depending on what exchange you're using, they will either not let you spend your money until it's had like 5 days to settle. For example, if you send a wire transfer to even Strike, they make you wait like 3 days before they'll let you either spend the money or I don't want to misquote about Strike, but every service other than Cash App that I'm familiar with makes you either wait 3 to 5 days before you can purchase Bitcoin, or they'll let you purchase your Bitcoin, but they won't let you move your Bitcoin until that wire transfer settles, that ACH deposit, whatever you use, settles. And of course, if it doesn't settle, they're taking that Bitcoin back. Cash App will let me spend my $20 immediately, and they will let me transfer it to my hardware wallet immediately. That is cool, and that's something you don't find on a lot of other services. So I've already added $20. I have a debit card linked to my Cash App, so that was like lickety-split. That was instant, and they're going to let me purchase instantly. So I'm tapping Bitcoin, tapping buy, entering $20. Okay, so here's where this rubs me raw. Currently, the price of Bitcoin is $37,957.51. So I'm hitting confirm, and boom, just like that, we purchased 51,243 more sats, but we purchased it between the spread and the fee at a price of $39,029.72 is our cost basis. So more than $1,000 more than the fair market price of Bitcoin right now. And that is my beef with Cash App. Now, this isn't unusual. These exchanges have to make money. All of them make money somewhere. If they don't charge you a fee, there's a spread. If they don't charge you a spread, then there's some other way they're making money. And it's probably when they're going to zap you for the $5 or $6 transaction fees to send it to your wallet. So, this is my pet peeve, and I'm not going to harp on Cash App about this a lot more. I need to either put up or shut up. I either need to decide I'm going to use a different service and do that, or just stop complaining because, as I mentioned, they're going to let me send these Satoshis to my hardware wallet for free. So that's still a positive, and that will still make up for it because while we ended up paying, more than 50 cents in fees and spreads on this transaction, we're not going to spend $4 to send, this Bitcoin to my hardware wallet. So we still made out like bandits. All right, and speaking of making out like bandits, those 51,243 sats bring our stack up to 8,453,056 sats. I kind of have an unofficial goal of seeing 10 million sats in this DCA Wednesday wallet. The closer we get to the halving, the less likely that looks like that's going to happen. Even if Bitcoin stays the same price, we have about 20 more DCA Wednesdays between now and the halving, so 20 times, let's just round it down to 50,000 is only, what is that? Another 200,000 sats. I'm sorry, I'm never very good at math. 50,000 sats times 20 for you. Those of you in Europe that have a good public school system, you're laughing at me right now. That's only 1 million more sats. So that would put our stack, less than less than 9.5 million by halving day. So maybe we'll get there. All that really matters is that the stack will continue to increase in Satoshis. I'm kind of FOMOing myself here, and this is how Bitcoin changes you. You set your initial stack goal at whatever that is, whether you want a quarter Bitcoin, a half Bitcoin, 1 Bitcoin, 6.15 Bitcoin, whatever. And then you reach that goal and you feel like you don't have enough and you keep moving the goalposts. And I didn't really have a goal other than to stack sats and to see if DCA worked out better than dollar cost, if dollar cost averaging worked out better than lump sum averaging, if DCA worked out better than YOLOing, and we have already proved that point. The other point I wanted to prove was that for those people that say I'm too late or I don't have enough money to invest in Bitcoin, that even if you have as little as $20 a week, it will eventually add up to an appreciable stack of Satoshis, something that might change your life one day. And I think we've already proven that as well. So, the size of the stack, the actual number of Satoshis we ultimately end up with before nobody's willing to sell us any Satoshis anymore is kind of irrelevant. All that matters is we've stacked as hard as we can. And so that gets down to another you do you thing. If $20 is nothing to you, hopefully you've decided what you're comfortable converting into Satoshis, what you feel you need to convert into Satoshis, and you're stacking accordingly. That you're not, Michael Saylor listening to the show and just simply stacking $20 because that's what we're doing. Obviously, this is just an experiment that we're conducting live on the air for everyone to see, because I find it useful and entertaining, but hopefully you're finding it useful or at least entertaining as well. But again, these are always you do you things. The only advice that I would give you, and we can't give you financial advice, but the life advice I would give you is that if we do hit hyper Bitcoinization, that you have stacked in a manner where you will not be kicking yourself wishing you had done more. And it's only human nature to second guess yourself, regardless of how hard you're stacking, and say, could I have stacked more? Could I have sold those chairs? Could I have not eaten one meal a day? Whatever. I'm being kind of facetious right now. But again, the halving is coming. Before you know it, not only will the halving have passed, we'll have set a new all-time high. Maybe this time will be different and we'll break out of the 4-year cycle. Maybe we won't, but eventually there will be another halving and then another halving. And, Bitcoin's price will have continued to go up and to the right. And if we achieve hyper Bitcoinization or don't achieve hyper Bitcoinization within the next decade or even within our lifetimes, Bitcoin will have at least increased in importance and increased in value. And you have the opportunity to not have missed out. So that's all I'm saying, is that when the time comes and you're looking back, as we tend to look back on life in general, that you've done everything that you comfortably could have done to prepare yourself for the future, to prepare your family for the future. And along those lines, don't forget to join us next Wednesday and every Wednesday while we grow that stack together on our DCA Wednesday episodes. But of course, until that time, keep on stacking those sats, you sexy sat stackers.